Okay, and joining us live, continuing corporate conversation, we have TV Chaudhary, who is the Managing Director at Premier Explosives, joining us. Good morning, Mr. Chaudhary. Again, great speaking to you. I'm Harsh here. Let me, sir, start off with trying to understand revenue decline marginally. What's playing out? Is execution not played out as would be expected? Give us a sense of what's playing out on the top line.
Good morning and thank you for having me. Yeah, like I always tell that we are in a business where it doesn't go by month to month or quarter to quarter. It is dependent on the inspections and deliveries made, execution. So this quarter, because deliveries are less because of the inspections and all those, the revenue is low, which probably will be made up in the next quarter.
Interesting. Any reasons that you had delays in orders, delays in receiving customer clearances, raw material issues, some production bottlenecks, anything that you were facing in the quarter gone by?
As far as the performance is concerned in terms of raw materials and all those, there are no issues. We have all available. It's yes, inspections and all those. Most of you know that our 80% business comes from the defense industry, and all defense supplies are subjected to pre-dispatch inspections. So many things, once we inform them, they time it and then inspections are taking place. If it happens before the end of this quarter, the revenue comes in this. Otherwise, it will go to the next quarter. These are the issues which are shifting the revenue from quarter to quarter in a whether increase or decrease.
But Mr. Chaudhary, what explains this sharp drop in margins that you've seen in the quarter, all the way down to 8.6%? And when do you think the margins will normalize?
I think you need to see the total 6-month figure, that is the year on year, the profit is up by 83%. So the margins here, there is because in the second quarter, it is shown as other income. I think that's why it is not there. But other income is nothing but is the income which has delayed because it was under in provision. Provision was made for 15% late delivery charges. Now that is cleared, so that is added back into the profit. So overall, I think the performance is better and then it will improve in the next quarter.
Mr. Chaudhary, so how should one look at the journey? You're obviously telling viewers and investors to zoom out a little bit, and that is the right way to look at things where defense counters and your company is concerned. What's the kind of growth pipeline? What's the kind of order book pipeline that you have? How quickly do you execute? At least give us a year-on-year kind of guidance. What's the kind of growth clip that you'll clock, and what's the kind of margin aspiration?
Presently, we have an order book of around 1,300 crores with us, out of which most of it has to be executed in 12 months' time. So half of it will come in this quarter, this financial year, and half will go into the next financial year. As far as the order book is concerned, it's quite healthy, and the execution is going. The execution in the terms of production, manufacturing is going as planned. Sometimes due to delays in inspections and clearances, it can go this side or that side of the quarter. Otherwise, overall execution is continuously, it is happening and it is going in a healthy way.
Fabulous. So you're suggesting 1,300 crore worth of execution over the next 12 months. Is that the right way to think of this?
No, that you have to take for 2 years, 24 months.
Fair.
24 years. Part of it will in this financial year, part will go to the next financial year.
Understood. Okay. I get where you come from now. Okay. And the margins on this order book that you have, what's the margin number looking like?
We are expecting almost 15 to 20% of the margins from order book what we have.
The order pipeline, give us a sense of that. So you've got 1,300 crore of order book, which you will execute in the next 2 years, which is currently 3 times your book to bill. Just for viewer perspective, it's 3 times Premier Explosives book to bill, and therefore, how strong is the order flow? Because that will also determine visibility going forward.
Steve, I got your point. In the book bouquet of the products we have, many products, we have the advantage of being the single supplier to the armed forces. So that is going to really push us up. That's what I'm.
Okay, and so give us a sense. Where are you on capacity utilization? How much capacity do you have in terms of how much revenue can you clock with the current capacity that you have? Give us that sense, annual.
See, capacity utilization, it changes from product to product. In some products, for example, right now we are working for countermeasures, the latest order of 429 crores order. There we are working to the full capacity. Whereas in the case of the propellants and rocket motors, we have still a lot of spare capacity, and we are expecting orders which are in the pipeline, which are going to fill up part of it. So like that, it is product to product, it changes. And wherever the countermeasures, the order where it is full, we are trying to build up some of the areas where it can bridge the gap, and then ultimately the overall capacity will come to the requirement.
Okay, understood, Mr. Chaudhary. But great to have you on the show today, and thanks for that insight on your earnings performance.
Thank you very much.